Hey there, let me start with a slightly awkward question. If you walk into a casino, put money on red, and hope really hard, that's gambling. But if you open an app, tap buy, and hope really hard, that's called investing? Feels suspicious. So let's talk about it. Because a lot of people secretly think the stock market is just gambling with better lighting and fewer free drinks. Meet Alice. Alice wants to be financially responsible. She's heard all the advice. Invest for the long term. Let your money work for you. The market always goes up. So she opens a stock app. The screen lights up like a slot machine. Green numbers, red numbers, charts bouncing around. Alice buys a stock. 5 minutes later, it's down. She panics. 10 minutes later, it's up. She feels smart. This feels familiar, like a casino. So Alice asks the question everyone asks at some point. Is this just gambling, but with extra steps? Fair question. So let's bring in Bob. Bob loves casinos. Bob also loves the stock market. But Bob doesn't use them the same way. When Bob goes to a casino, he knows the rules. The house has an edge. The odds are fixed. The longer he plays, the more likely he loses. Casinos are designed so the math is against him. Entertainment with a cost. Now Bob opens the stock market. And here's the first big difference. There is no house taking a guaranteed cut every time you buy a stock. There are fees, sure, but no built-in math saying you must lose. In fact, over long periods, the stock market has historically gone up. That alone makes it very different from a casino. But here's where things get confusing. The experience can feel identical. Prices move randomly in the short term. News hits. Tweets fly. Charts spike. If Alice is buying and selling based on vibes, headlines, or adrenaline, she's not investing. She's gambling. Same tool, different behavior. Now let's slow this down. What is a stock, really? It's not a lottery ticket. It's ownership. A tiny slice of a real business. That business sells things, pays employees, earns profits. When Alice buys a stock, she's not betting on luck. She's buying a claim on future cash flows. That's the boring truth. Casinos don't produce anything. Stocks represent things that do. Now here's where people trip. Ownership doesn't feel like ownership when you can buy and sell it every second. That liquidity turns investing into a game. A game with flashing lights. And humans are terrible at games like that. We see movement and assume meaning. We see red and feel dangerous. We see green and feel genius. The market knows this, and it exploits it. But that doesn't make the market gambling. It makes humans emotional. Now let's do a quick thought experiment. Imagine two Alices. Alice 1 buys a stock because she believes the business will grow over 10 years. She doesn't check the price every day. She doesn't panic on bad news. She doesn't chase hype. Alice 2 buys the same stock because it's moving. She watches it constantly. She sells on fear. She buys on excitement. Same stock. One is investing. One is gambling. The difference isn't legality. It's time horizon. Casinos operate in minutes. The stock market can operate in decades. Now let's talk about odds. In a casino, the odds don't change in your favor over time. In markets, time is the edge. Long-term investing benefits from economic growth, innovation, productivity, population expansion. None of that exists in roulette. But, and this is important, the market doesn't guarantee you win. It guarantees that someone wins. Over long periods, owners of productive assets tend to be rewarded, but only if they behave like owners. The moment Alice treats the market like a thrill machine, she hands her edge back. Now here's the uncomfortable part. The stock market is full of people who treat it like gambling. Day traders, hype chasers, panic sellers. They provide liquidity. They provide volatility. And ironically, they often fund the returns of patient investors. Their losses become someone else's gains. This is why the stock market feels like gambling. Because part of it is, but it's optional. Now let's talk about randomness. Short-term stock movements are noisy, very noisy. Trying to predict tomorrow's price is like predicting the weather with vibes. But long-term trends are driven by fundamentals. Earnings, growth, Innovation. Casinos don't have fundamentals. No matter how nice the building is, the dice don't start paying dividends. Now let's be honest. The market doesn't care what Alice believes. It doesn't reward effort. It doesn't punish ignorance consistently. That randomness feels unfair. And humans label unfair randomness as gambling. But unpredictability doesn't equal gambling. It just means outcomes aren't guaranteed. Now here's the line everyone misses. Gambling has a negative expected return. Investing has a positive expected return if done correctly. That if is doing a lot of work. Because investing correctly is boring. Diversification, patience, low fees, long time horizons. Boring doesn't feel powerful. Action feels powerful. So Alice is tempted to act, to trade, to react, to do something. That's where investing quietly turns into gambling. Not because of the market, but because of behavior. Now let's talk about regulation. Casinos are regulated to protect the house. Markets are regulated imperfectly to protect participants. Disclosure rules, accounting standards, insider trading laws. The goal is fairness, not entertainment. But when you put a game-like interface on top of a serious system, people play games and then blame the system. So is the stock market legal gambling? Sometimes, for some people, in some behaviors, but it doesn't have to be. The market is a tool, a very powerful one. It can build wealth slowly or destroy it quickly, depending on how it's used. And here's the final twist. The market doesn't punish gamblers immediately. It lets them win sometimes, just enough to keep them playing. That's dangerous, because occasional wins reinforce bad habits. Until one day, Alice realizes she's stressed, reactive, and confused, and she's not actually investing in businesses anymore. She's just betting on movement. And that's the moment the question changes from, is the stock market gambling, to something much more uncomfortable. Am I gambling, even though I call it investing? Even though I call it investing? That question makes Alice uncomfortable. Because when she's honest with herself, she notices something. Her mood changes with the market. Green days feel like validation. Red days feel like personal failure. She refreshes the app again and again. That's not ownership behavior. That's casino behavior. So Alice decides to run a little test. She stops watching prices. Not forever, just for a while. She asks different questions. What does this company actually do? Does it make money? Will people still need this in 10 years? Suddenly the noise fades. And something weird happens. The market feels less exciting, less dramatic, less addictive, which is exactly the point. Real investing is boring on purpose. Now let's talk about why the stock market looks like gambling. It's not an accident. Modern markets are fast, too fast for human brains. Prices update every second. News breaks instantly. Opinions spread in minutes. That speed turns uncertainty into emotion, and emotion into action. Casinos figured this out a long time ago. Bright lights, fast feedback, small wins. The market didn't design itself this way, but the interface did, and the interface trains behavior. Now let's zoom out and talk about risk. Gambling risk is binary, win or lose. Investing risk is probabilistic. You don't know when you'll win. But over time, the odds shift. This is why time matters so much. Time turns uncertainty into probability. Short-term investing feels random. Long-term investing reveals patterns. Casinos never reveal patterns in your favor. Markets can, but only if you let time work. Now here's the part that makes people angry. The stock market rewards patience, but patience feels unfair. You can do everything right and still lose money in the short run. That feels like gambling, but the difference shows up later. Casinos never turn against the house. Markets can turn against impatience. Now let's talk about speculation. Speculation isn't evil. It's part of markets. Price discovery, liquidity, risk-taking. But speculation is not investing. Speculation says, I think someone else will pay more later. Investing says, I think this business will produce value over time. Same action, different intention. The market doesn't label them for you. You decide which game you're playing. Now let's bring Bob back. Bob doesn't care about daily moves. Bob owns a diversified portfolio. He reinvests dividends. He ignores noise. He checks prices occasionally, like checking the weather. Bob isn't smarter than Alice. He's just less stimulated. And that's his edge. The market quietly transfers money from impatient hands to patient ones. That's not gambling. That's behavioral economics. Now let's talk about why people want the market to be gambling. Because gambling is exciting. It promises shortcuts. It suggests skill where luck dominates. It feels empowering. Long-term investing feels slow. It doesn't give dopamine hits. It doesn't make good stories. No one says, I diversified and held for 30 years at a party. But that's how wealth is usually built. Quietly. Now here's a subtle point most people miss. If the stock market were truly gambling, governments wouldn't encourage it. Pensions wouldn't rely on it. Retirement systems wouldn't depend on it. Entire economies wouldn't be built around it. They rely on it because over long periods, it reflects real economic growth. Casinos don't fund retirements. Markets do, but again, only for those who treat them like ownership systems, not entertainment systems. Now let's talk about losses. Losses in gambling are expected. Losses in investing are temporary, unless you panic. The real damage often isn't the loss itself. It's the reaction. Selling low, buying high, chasing trends. Those behaviors convert investing into gambling. Now here's the hardest truth. The stock market doesn't protect you from yourself. It doesn't stop you from overtrading. It doesn't block emotional decisions. It doesn't warn you when you're acting on fear. Casinos at least put clocks on the wall. The market just waits. Now Alice understands something important. The stock market isn't gambling, but it can become gambling the moment she stops acting like an owner and starts acting like a bettor. Same market, same stocks, different mindset. And that's the part no app can automate. Because investing isn't about predicting the future. It's about positioning yourself so time and growth work with you, not against you. So when people say the stock market is just legal gambling, what they're often really saying is, I used it like a casino and got casino results. The market didn't change. Their behavior did, and that's uncomfortable. Because it puts responsibility back where it belongs. Not on luck. Not on algorithms, not on the system, on choices. Small, boring, repeated choices. So in conclusion, the stock market isn't inherently gambling, but it can become gambling depending on how you use it. Gambling is driven by short-term odds and excitement. Investing is driven by long-term ownership and patience. The difference isn't the market itself, it's your time horizon, behavior, and expectations. Treat the market like a casino and it will feel like one. Treat it like a way to own productive businesses over time and it becomes something very different. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.